If you're a Forex trader and you have been struggling to actually end up making money with Forex trading, I'm here to show you one of the easiest strategies and the one that I personally use to make my profits with Forex trading whenever I'm trading manually. So if you want to learn the strategy, make sure you stay up until the end of this video. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, I'm here to teach you an easy Forex strategy that you can actually apply on your day-to-day activities, and more importantly, that you can do at any time with any pair. So if you want to learn it, make sure you stay up until the end of this video. But hey, if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. Hey, but before I actually jump into the content of this video, I just wanted to give you a warm invitation to a 100% free Forex training that I'm having this week. So if you want to attend this live webinar where I'm going to teach you all the basics in regards to Forex and basically understand Forex the way I see it, then I highly recommend you to go into the link in the description of this video. You can register 100% free for the next live webinar, and more importantly, you won't really have to pay anything like some of the webinars that you can find out there where they're going to charge you like $10, $20, or even $100 just to attend a webinar. And this webinar is going to be with no cost at all. And if you want to be part of it, I highly recommend you to do so, because at the end of the day, basically what's going to happen is that you're going to learn all the basics in regards to Forex trading. So the invitation is right there. Go into the link in the description of this video and I'll see you in that webinar. Okay, before starting with this specific video, you gotta understand that there are 4 types of trading Forex, or 4 trading styles, if you wanna call them that way, that you first need to understand before we jump into the strategy settings. Number 1 is because you do need to understand that not every trader trades the exact same way in Forex trading. And number 2, that you have many options out there in order to choose which one is the most suitable for you. And number 3, so that you fully understand what type of strategy I'm actually going to be teaching you. So the first type of trading style that there is actually a scalping trader. Scalping traders basically are the ones who actually look for fast opportunities, 5-minute candles, usually 1 to 5-minute candles, and basically their trades take like 15 minutes, 20 minutes, or 1 hour at the most, and they take profit fast. Okay, that's one way of trading. The second way of trading is called day trading. Day trading, basically it stands for a trade that it's actually there for about a day or even just a little bit more. So some traders, at least in stock trading, basically what they do is that they close all of their trades, whether they're winners or losers, at the end of the day. But with Forex trading, you actually can keep it running if it's actually going on the good or profitable side. So day trading usually use candles from 15 minutes to 1 hour candles. Okay, so what they do is that you actually identify where the trade or the currency or the pair of the asset or the stock is actually going to be moving for the entire day. So with that, we're going to talk about analysis, fundamental and technical analysis in this specific video. But basically are those trades that are going to take, let's say, 6 to 8 hours or 12 hours at the most. So that's day trading. Number 3 way of trading is actually called swing trading. Swing trading basically stands for all the trades that are going to take few days most of the time, few days, even a couple of weeks most of the times. So swing trading actually goes with candlestick with 4 hours or even 1 day candlesticks. So with that, most of the times it's actually fundamental analysis what you got to do, because you need to determine where that pair is actually going to be moving during the month. Okay, so it takes a lot less emotions, but it takes way longer for you to actually end up making profit depending on how much you're investing. Okay. okay? I'm not saying which one is better or which one is worse. I'm just telling you the ways of trading. And the number 4 way of trading is actually called position trader. A position trader usually plays 1 or 2 trades during the month, and sometimes even after 1 month, the trade continues to be open. Now, that one takes a lot of fundamental analysis and of course a lot of technical analysis as well. But basically you use 1 day, 1 week candlesticks, okay? So you basically determine like, okay, so I'm in January, where is the price going to be by the end of January and probably by the end of February, right? So there are trades that are way longer than day trading. Now, in this specific video, I'm going to be teaching you a day trading strategy, okay? What we're going to be using is 1 hour candlesticks, and right now we can jump into the settings of the strategy. Okay, so now we're going to jump into the strategy settings, and we need to understand everything in regards to this specific trading strategy. The first thing that you got to understand is that this specific strategy is going to be based on trending, okay? So what we're going to be looking at is actually 2 trends on this specific pairs. So let me just go ahead and choose euro against the dollar. There you go. No indicators attached. So what we need to actually do is actually, first of all, add 2 different moving averages. Number 1 is actually the 200 EMA. What I mean by EMA is exponential moving average. Okay, so we can actually, let me just go ahead and delete this one and add it like from scratch. So you type in moving average, there you go. And then you add another one because you're gonna add 2. So when you actually add them, you're gonna go to this tool or setting box and you're gonna select the color. Whatever color you want to, it's fine. That doesn't make a difference. I would just suggest you to actually make it a little bit thicker and then go ahead in the inputs and change it to the period of 200 and change it to SMA. Okay, I just made a mistake and I'm sorry about that. You need to go to indicators again and type in moving average, and here you will need to choose it this way right here. Let me add it to my favorites. So you're gonna add 2, okay? Not the simple moving average, but EMA. So again, you're actually gonna go here, you're gonna select the actual color, the thickness, and the period of 200. Okay, that's gonna be the first one. And the second one, you can choose a different color or whatever. I'm gonna choose the exact same one. It doesn't make a difference. And you're gonna select the period of 50 moving average, okay? Then you hit okay. Now you can see these 2 moving averages going around all the time. But there's one thing that I want you to realize. There are some crossovers on this specific indicator, and whenever that crossover happens, like most of the time, it's not a 100% accurate strategy like there isn't in the world, but you can see that there are some moments when the cross happens that the pair continues to go into that direction. Does that make sense? So what you need to do is actually identify those crossovers and enter those specific transactions. How do you do that? So if we actually go and we're gonna go ahead and go right here, just go ahead and show you the replay. There you go. So what you're gonna do in here, it's very simple. You see, the candlesticks are going to be forming, and you're going to see that the moving average is going to actually in the direction of the 200 moving average, right? The 50 is the one that moves longer, but like a little bit more volatile, and the 200 is the one that actually is a little bit more steady. So what you need to do is wait for the crossover, and when the crossover happens is when you enter the trade, okay? So here you can see that the candlesticks actually cross the 200 moving average, but you're not gonna enter there. You're gonna wait up until you see that the actual moving average crosses. When you see the crossover is when you actually enter, right here, okay? Now you're gonna identify a couple of things in this specific setting. Number one, that this is the exact crossover. You don't enter there, you enter on the next one. Okay, on the next candle, this one right here. Okay, now your entry point will definitely vary by a few pips if depending on where you want to enter. If you want to enter at the beginning of the candlestick, or you want to enter at the end of, when the price is actually dropping or something like that, right? So whenever that actually happens, what I personally do is bring the stop loss all the way to the 200 moving average. Why do I do that? Because if the candlesticks touch again the moving average, it's likely that the price will actually change in direction again. So then I would give at least a 3.0 risk reward ratio. but then we can be playing around with it, okay? So when that actually happens, that's the entry point, right? So you actually start and look at the charts. There you go. Now it started jumping. Perfect. Now, one thing that I do recommend you to do is whenever you actually see that the price goes over 2.0 in risk reward ratio, like right here, you can move the actual take profit all the way to 4.0, let's say 6.0, so you can double it up, 6.0, there you go. But keep on moving the actual stop loss, of course. Right here, you can move it to the entry point, for instance. And every 2 risk reward ratio, every 2.0 risk reward ratio, then you can keep on moving it. Keep on moving it, okay? Now, I'm not saying close the trade immediately. I'm saying play with the trailing stop and see where that actually going to take you. So you can see, for instance, right here, that the actual price is kind of bouncing in there. It's jumping, but it's not really going into a really high direction. So you just skip the actual, take profit in that level. I'm just gonna move this around a little bit. And the trade continues to be active. It was open on April the 21st. Right now we're on April 11th. April 6th, April 6th. So it keeps on moving, keeps on moving, keeps on moving. Now it's jumping and it's heading towards the 6.0 risk reward ratio, which is around, let me see, 198 pips, okay? There you go. Now it's getting closer. So if it's getting closer, what I would do is actually move again to like 8.0 risk reward ratio. There you go. Now, obviously at this specific point, you already moved the stop loss, right? To a profitable side. I'm not gonna move it so that you're gonna have the entire graphic for you, but you get my point. And the price continues to go right there. Now, obviously this trailing stop right now is like around 4.0 or 6.0 risk reward ratio, right? Now, let me just go ahead and finish with this trade, and then I'm gonna give you some other extra tips. There you go. Now we jump even a little bit more. It almost hit the take profit. I would have closed it around right here, honestly, but there you go, boom. It hit the take profit right here. So it's at 8.0 risk reward ratio. What does that tell you? That out of that trade that you actually risked 2% of your balance, you ended up making around 16% of your balance in pure profit. No bad at all, right? Pretty simple, and hopefully you got the idea of this specific entry point. Now, in order to understand this, we gotta do a fundamental analysis. Okay, what is the fundamental analysis? The fundamental analysis tells me where the actual price is actually going. Okay, where the price is actually going. So if the price is actually going like this, for instance, whenever you see that the 200 moving average is below the candlesticks, this is considered it to be a uptrend. And whenever you see the 200 moving average to be above the candlesticks, that is considered to be a downtrend. Okay, that's what the 200 moving average actually does. Okay, it's basically telling you where the trend is actually going. So that's a fundamental analysis. Now, the technical analysis though comes right now. So you actually see, and let me go ahead and do the replay one more time. So you actually see that the price of this asset is actually bouncing around and so on, but you need to understand when to enter into the trade. That's technical analysis, the crossover, okay? That's number one. The second technical analysis that I recommend you to do is actually to identify the RSI and the stochastic oscillator. Why is that? Because you could have closed the transaction at this specific level because you saw that the price was actually dropping. Does that make sense? So you see that the price was completely oversold right here on the RSI. So you could have closed the trade in this area. If you would have done that, you still would have won a 1.81 risk reward ratio. Of course, right now we've been a lot more, aggressive into these trades, but you could have closed it again in this oversold condition. Why? Because the oversold condition basically tells you that the price will actually have a retraction. Right? So on the stochastic, you see that is oversold, overbought, but here's what you got to understand as well. These retractions happen against the trend, okay? So you can see that there's very few or none. There's one is not even oversold, but there's two options that would allow you to see an oversold condition in this specific pair. Why is that? Because since it's an uptrend, what the RSI is actually looking for is for small retractions, such as this one right here, this one right here. Here we have another one, which is around right here. A very small retraction. Here's a pretty strong one, and you can see that this was this retraction. Here's another one, and it's this one right here. But none of them actually brought the actual trend back down. Now, when is the price of or the trend changing, right? This is, like I said, the part of the technical analysis. We're going to continue looking at the pair, and there's going to be eventually a moment when the 50 EMA is actually going to cross again the 200 EMA. It's going to happen right now, and boom. I'm sorry, it didn't happen, right? Let me see. No, it didn't happen. So it didn't cross. Boom. Now it did. Now it did right here. So what do we do if this actually happened? Pretty damn simple, right? What we're gonna do is actually we're gonna enter a second transaction. Not here, but here. Not at the cross, but on the next candlestick of the cross, right? Not here, but this one right here. At the beginning of the candle, let's say that we decided to enter here. So I actually move the actual and my stop loss to the 200 EMA, and I give it again, let's say 3.0 risk reward, which was actually pretty fast. I'm gonna give it already a 4.0. So it continues to jump a little bit. Let me move this around. Here, I would have already moved my stop loss to like 6.0, obviously because I realized that the price was actually dropping. I removed my stop loss to the entry point, and boom. Now, we didn't lose the trade. We didn't make money, but since we moved the stop loss to this area, we ended up making some profits as well. And it can continue like this. Now it went across, and it went across all the way over here. And we can continue playing around with those crossovers on the pair. Now, does this work with every single pair? Of course it does, right? And one thing that is super, super important for you to understand is this baby right here called money management. Why is this so important? Because when you actually, this part right here that you're looking at, this stop loss should be no more than 2% of your balance. No more than 2% of your balance, okay? That basically means that whatever you actually get as a risk-reward ratio, this one right here, risk-reward ratio, you need to multiply it by the actual stop loss percentage that you risked, and that's your profit. So 8, multiply for this 2%, that brings me a 16% profit. If you only decide to risk 1%, that's actually fine. Then you would have made an 8% increase in your account, okay? There are some funds out there, hedge funds, mutual funds, and so on, that actually are aiming for 10% return on investment per year. And you can do this with one single trade. Now, what's the risk of it? Obviously, the risk is that you're losing 2% of your balance, right? But 2% against 16% in profit, trust me, it is completely worth it. But you need to use these money management tips if you want to get, these exact same results. Now, before you go out of this specific video, I just want to show you something really, really amazing that I created personally for you if you're a trader in Forex and you want to make sure that you are indeed profitable. And this is the BLW FX tool. This is a personal custom indicator that I created myself in order to show you where to actually enter the trades. And the way it works is that you basically download it and you install it in your MetaTrader 4 platform, and you're gonna get signals telling you when to enter and when not to enter trades. So for instance, I'm actually analyzing this specific trade right here. It's a 10.0 risk-reward ratio. 10.0 risk-reward ratio, and it's this signal that you see right here. This arrow that actually came around, let's see, on October 1st, it gave a 10 risk reward ratio. How much is that? If this is 2%, then I basically got a 20% return in this specific transaction. How cool is that, right? So incredibly easy to use application and 100% guaranteed that is actually going to be super suitable for beginners. The other trade that I actually analyzed for this specific video is this one right here with a 9.17% risk reward ratio, and is this trade right here that actually came along on October 6th. Okay, so basically it identified that the price was going to go up, so that brings us to around 18% return on investment out of that 2% risk that we actually put into it. So if you were looking for a Forex tool that will tell you when to trade because it's too complicated to do the fundamental and technical analysis, which it is, trust me, it is, then this is actually the tool that you should be looking at. So if you want to actually start using it, if you want to get it, I'm actually putting the link in the description of this video. It's blwfxtool.com, and it's by far the most underrated application in the world. You can see it says the BLWFX tool is a Forex indicator that analyzes the markets and finds trading opportunities. It identifies patterns in the Forex markets and triggers the most profitable entry opportunities. The BLWFX tool is a signals generator made for beginner and experienced traders with the purpose of reducing risks and increasing profit. So the invitation is right there. The link is in the description of this video. You can even get a free training on it if you want to, and more importantly, you can get it right now. We don't have that many spots available every month, but you can get it right now for one lifetime price. So the invitation is right there, blwfxtool.com. Hey, so what do you think about the video? Did you like it? If you did, smash the like button to support this YouTube channel. And if you want to see more content just like this one, make sure you are subscribed to this YouTube channel. But hey, if you have any questions or comments to share, make sure you use the comment section below because my team will be happy to reply to you at any moment. So make sure that you actually address all your questions right there in the comment section below. Thank you very much for watching this video, and I'll see you on the next one.